Hey everybody, this is a short video about Roth, how to maximize Roth accounts. Specifically, I was asked a question of a client by a client earlier this week. They were saying, hey, I think I'm above the income limit for contributions to a Roth account, but I was considering opening one. Do you think I should open one anyways? And if so, what are the ways I can use it? So I'm going to go through as quickly as I can, Roths from beginning to end, the different ways to get money into it, why you want to consider putting money into it, and let you go from there. So what is a Roth account to begin? A Roth account is a retirement account that gives you favorable tax treatment insofar as when you put money in, the money is taxed in the current year, and then you can invest it within the Roth account bucket, and then the growth and distributions of that money are never taxed again. It's a very, very lucrative financial planning or retirement planning tool. Not only will you not get taxed on any of the growth and pay taxes in the future, but also when you are crafting a income for yourself in retirement, which is essentially what retirement planning is, it's how do you pay yourself a salary to replace the salary you are giving up by stopping work. Roth accounts or distributions from Roth accounts have a myriad of really favorable treatments. And so I won't go into the complexities of that today, but Roth accounts are a great financial planning tool. Essentially, it's just another tool in your toolbox. You don't want to arrive at retirement with only one instrument with which to plan, which for most people is either their home equity or their 401k. Having multiple tools will give you more scalpel, nimble approach to retirement planning. So starting when you're young and even starting if you're 50, 55, 60 can still be wise. And obviously this should be done on a case-by-case basis. And I'm Eric, by the way. I'm a certified financial planner professional. I own Peak Financial Planning. So thank you for watching this video. And let's just jump right in. Beyond what Roth accounts are, how do you contribute to them? And how can you contribute to them once you exceed or are above the income limits that allow for Roth contributions? So the first thing is, in order to contribute to a Roth, you have to meet certain criteria. First, you have to have earned income in the year that you contribute to the Roth. So you have to make money through some kind of job or pay system. The second thing is you have to be below a certain income level in order to contribute. Once you make too much money, the government says, hey, we're going to remove this tax advantaged option for you, and you'll have to go search for other things. Now, there are still ways to get Roth money into Roth accounts, and that's what I'm going to show today as part of this video. But this screen right here, you can see shows the income thresholds for Roth contributions. These are what you'd call the maximum allowable income thresholds for either a single individual or married filing jointly. Once you make more than these amounts, you cannot contribute directly to a Roth account. So the question is, what are the 4 ways to contribute to a Roth account? Well, the first is what we just described. That's the normal contribution if you're below those income thresholds. The second is you can do what's called a Roth conversion, which is you would take, let's say you had an old 401k or an old IRA from prior contributions that you'd made in other years. You stop working for the old employer that the 401k is connected to. And you start working with a financial planner and they recommend, hey, we should do some Roth conversions to begin putting money into Roth accounts. You don't need earned income in order to do a Roth conversion, but you do need money to pay the tax, because what happens when you convert it is you pay the tax in that current year to make that money Roth eligible. And I'm not going to show the calculation in this video, but just understand there is a vehicle or method to move money into a Roth if you are both above the income limit and also do not have earned income. Now, there's a third way, which is the backdoor Roth. The backdoor Roth is when you make a contribution to a non-deductible IRA or 401k, which means you put money into an IRA, but you don't get any of the tax benefit. You don't get the current year tax deduction. It's also not a Roth election. You have to do a specific tax form that claims this as a non-deductible IRA. You are still limited to the annual limit of $6,500 for people under 50 years old and $7,000 for the catch-up amount for 50 plus. But you can make that contribution into a non-deductible IRA, and then you can convert it into a Roth account. All right, so it's just a backdoor way to do it. So you'd make that maximum contribution of $6,500 if you're my age at 34. If you're 50 plus, you'd do the $7,000, pay the tax in the current year, convert it into Roth, You have to file certain tax forms to do this. So I do recommend working with a financial planner or a CPA or someone to help you guide you through this process, because not all scenarios should you do this either. It is a good planning tool, but you need to be in a particular situation where it's wise to do so. And then the fourth and final way that you can get money into a Roth is through what's called a mega backdoor. And this is usually available to self-employed individuals who have retirement options like a SEP IRA or a simple IRA or a solo 401k. Where you don't have income limits. So if you make a lot of money, you don't have an income limit on how much, on your ability to contribute to that account. But also you can roll over those accounts year by year without limitation. Roll over meaning Roth convert it. You could, let's say, contribute around $60,000 a year to a solo 401k, and then convert that whole amount to a Roth if you so chose, or if you did not have a Roth contribution available in that solo 401k. But those are your four ways to get money into a Roth. It is a highly lucrative, very valuable tool, and I do recommend considering it in almost all financial plans. It's just going to come down to your particular set of circumstances, your tax bracket, your earned income amount, how much surplus cash you have. Those things will determine how much you should contribute to a Roth. And I will include links to these guides that can be helpful to look at, to help understand when should you do a Roth conversion, what are the rules around them, in the description to this video. But I hope this was helpful. And so the short answer is you should probably have a Roth account open no matter what, even if you're above the income threshold. And then from there, work or do research on your own, or work with a financial planner to help you determine how much to contribute, how much to convert, when to do so. And then eventually when you come to the retirement strategy, when you're closer to retirement, let's say from age 50 onwards, these come in big time handy when it comes to planning how you're going to pay yourself out of saved assets. So that's it. Thank you for your time and attention watching this video. If you have questions or comments, please leave them in the comments section below. You can also watch some other videos I've made. I have a free masterclass that I call the Secret Retirement Plan Big Finance Does Not Want You to Know About, which you can find a link in the description. That video is basically the 8 primary behavioral activities you can control that have nothing to do with your investments, or they have nothing to do with what you invest in. So there are things you can directly control that can tremendously improve your retirement income or your financial independence income at whatever point you choose to take that. So I highly recommend that. It's a comprehensive guide. You can take the information from that and take action right away. You can find that link in the description to this video here below. And if you want to learn more about my business or working with me, you can Google Peak Financial Planning or go to www.thepeakfp.com and learn more about me and schedule an appointment. Otherwise, I hope you really enjoyed this video, and I'll see you in the next video.